Welcome again to this beautiful session of ours, a continuation of what we were doing earlier on. Remember, we had introduced the concept of stochastic inventory model. In our previous class, we had looked at this question for May 2017, question number 5, part B. That is advanced management accounting question. So, we had looked at that question whereby we had looked at the concept of how to determine the safety stock and also to determine the probability of stock out cost. In our class today, it's a continuation of the same concept, though handling that concept in a whole different angle. So welcome to this class today, and for us to understand the concept clearly, we are going to handle an illustration question from our past paper, and this question was tested in November 2019, question number 2, part B. This question of ours was tested in November 2019, question number 2, part B. So, still the concept, stochastic inventory model, but the question that I want us to handle is for November 2019, question number 2, part B. Question number 2, part B, which, if you can clearly see, just below here, it has been written, that question. November 2019, question number 2, part B of that question. It was a very interesting question because, in this case, we are not given our reorder levels, and at the same time, we weren't given our probabilities. So it was all about us coming with all these concepts. The aspect of probability and talk of our reorder level. Because remember, we mentioned that any given point, whenever I'll be talking of using of a safety stock model and a stochastic inventory model, we should be having the stock out costs per unit. We should be having the reorder level. We should also be talking of the holding cost per unit. All these elements, we should have them at the back of our mind, including the probabilities of our demand levels. So, in the event that you're not given, how are you going to handle that? So let us go through this question together. Again, as usual, I'm going to share in our screen. Then we take a screenshot and we work it out together, both of us. So this is a question, my good students, this is a question. So this is what we are told. November 2019, question number 2B, Advanced Management Accounting. We are told, Kiawara Limited maintains a perpetual inventory system. The economic order quantity model has established an economic order quantity of 3,000 units with an average daily usage of 100 units and a lead time of 20 days for each single input product branded Z. The following information relates to the usage of product Z during the reorder period. So I'm giving our usage during reorder period, and I'm giving the number of items the quantity is used. This is the frequency of how it is used, right? Additional information, number 1, we are told stock out cost amount to 400 shillings per unit. The optimum number of orders based on the EOQ model is 5 times per annum. We are talking of the number of orders. The annual carrying cost is 500 per unit. 500 is 80 shillings per unit, sorry. Required, advise the management of Kiwara Limited on the amount of safety stock to be maintained. And part 2, determine the probability of stock out. Determine the probability of stock out. Determine the probability of stock out. I'm giving you guys time to go through that question. Go through that question. You can take a screenshot of the question. So by the time we start working it out, it will be very easy for us. It will just flow. It will just flow. It will just flow. Okay. Believing that you have the question right, so this is what you are going to do. This is what you are going to do. This is what you are going to do. So we are given that question. I'm required to determine the amount of safety stock to be maintained and also the probability of our stock out costs. And we weren't given a probability. So at that point, where are you going to start from? Because as at the back of our mind, you know very well These are the main items that we should be having at the back of our mind. To determine our stock out cost, or to determine talk of what we should be having in mind anytime I'm dealing with a safety stock, anytime you're dealing with a safety stock, these are the main items that we should always be having at the back of our mind, is to determine our holding cost. Holding cost of what? Holding cost of maintaining safety stock. Holding cost of maintaining safety stock. Then I should be able to determine, of course, to determine the holding cost of maintaining the safety stock, we know very well. I'm going to talk of our safety stock. We are going to talk of our safety stock. We multiply by our holding cost per unit. We multiply by our holding cost per unit. So meaning that we know very well that I should be having what? Our holding cost per unit. Then I'm also required to determine our stock out or shortage cost. Stock out or shortage cost. Shortage cost. Which you know very well, to determine this stock out or shortage cost, this is what you're going to do. I'm going to talk of our expected stock out cost, expected stock out units. We multiply by the number of orders. We multiply by the number of orders for the period, number of orders for the period, number of orders for the period, number of orders for the period. Then we multiply by the stock out cost per unit. Stock out cost per unit. The moment we do have these concepts, that should give us what? Our stock out or shortage cost. And whenever we are talking of expected stock out in units, my good students, what should click at the back of our mind is the average. Average. And in that case, we have to do with what? We have to deal with probabilities. So basically, the summation of this case, this is what will give us our total cost. Total relevant costs. Anytime we are dealing with the concept of safety stock. Having the two should give us our total relevant cost. Always have that in mind. Always have that in mind, my good students. Always have that in mind. So, come to our question, because whatever that you're doing here, this is just a recap on what we did in our previous classes, right? This is just a recap on what we did in our previous classes. So mentioning that, come back to our question. So allow me to erase here, allow me to erase here, allow me to erase at this point. Now come back to our question. Identify what I was given and what we need to do. Stock out cost, or the aspect of what you are asked to determine the amount of safety stock to maintain. So we know very well that I must be having our reorder level, because it is the reorder level that will guide us. Because it is the reorder level that will guide us. And if we can clearly see in this question of ours, there is nowhere where we are given our reorder level. There is nowhere where we are given our reorder level. There is nowhere where we are given our reorder level. There is nowhere we are given our reorder level. Because you know very well that at this point, always for us to work out the optimal, or rather for us to work out the safety stock, we are going to start from the reorder level. For us to work out the safety stock, we are going to start from the reorder level. And you aren't given. So you need to determine our reorder level first. You need to determine our reorder level first. So, determination of our reorder level. Reorder level, we know very well, we normally determine our reorder level by taking our maximum demand times maximum lead time. This should give us our reorder level. This should give us our reorder level. And what you should never forget, my good student, is this. Always, the concept of lead time will always guide us. If in the event that I'm given lead time in days, meaning that our maximum demand must also be in days. If I'm given lead time in months, that means that also our maximum demand should be in months. If I'm given lead time on a quarterly basis, that also means that also our maximum demand should be on a quarterly basis. If I'm given on an yearly basis, that also means that our maximum demand should also be on an yearly basis. So having a question, what were we given? What was our consumption? What was our consumption? Our consumption, you can clearly see, I was given our consumption to be, look at this case. On top where we are told, the economic order quantity model has been established, an economic order quantity of 3,000 units with an average daily usage of 100 units and a lead time of 20 days for each single input. So I'm given 100 days, or rather 100 units, and a lead time of 20 days. So having this case, we can now clearly determine our reorder level. Our consumption, I'm given 100 days. And our lead time, I'm given 20 days. I'm given 100, daily consumption is 100 units. That is our maximum demand. And our lead time, I'm given 20 days. So clearly, we can determine our reorder level. So therefore, at this point, my reorder level will be 100, of course, by 20 to give us 2,000 units. And this is a point where we are going to start from. This is a point, my good students, where we are going to start from. The reorder level being 2,000 units. That's where we are going to start from. And this case of ours, the question is, were we given probabilities? We weren't given our probabilities. So this is the data that you are given. I also need to determine our probabilities. So this is what I was given. Demand, or rather usage during reorder period. I was given usage. So this is, take this as our demand. Our demand, I was given 1,800, 1,900, 2,000, 2,100, 2,200, and 2,300. Then frequency, I was given a frequency of 34. That is the number of times the quantity is used. That is what you're timing it as frequency. I'm having 34, 40, we have 90, if you're with me in that question, 20, I'm having 10, and you do have 6. So definitely the moment we do have frequency, we can now determine the probabilities of these demand levels. You can determine the probability of our demand levels. So therefore, having this case, our probability here will be, having this case, my good students, my probability at this point, you should be talking of what? The first case, we should be having 34, yes, 40, 90, 20, 10, and 6, right? So we have 200. So the first case, I should be talking of my probability being 34 of 200. I should be talking of a probability of 0.17. 0.17. The other point, you should be having 40 of 200. That should give us 0.2. 90 of 200. That should give us 0.45. 20 of 200, that should give us 0.1. 10 of 200, that should give us 0.05. and torque of 6 of 200. That should give us 6 of 200. That should give us 6 of 200. That should give us 0.03. 0.03. So we have our probabilities, my good students. We have our probabilities. And that will be our starting point, right? So the moment I'm at that point, remember our main aim is to determine what? The amount of safety stock that the company should maintain. And to determine this amount of safety stock that the company should maintain, I know very well that I need to achieve a safety stock level where the company is incurring the minimum cost as possible. Come to our question. We identified our reorder level. And we mentioned anytime we are talking of our safety stock, reorder level will be our base. We are going to start from our reorder level. So all these units above, we are going to leave them. So that as at the end of the day, I will want to determine our safety stock. Here, I want to determine our safety stock. I'll also be required to determine our holding cost. And I'll also be required to determine our shortage cost. Shortage cost. I'll also be required to determine our shortage cost. So that as at the end of the day, we can clearly come and determine probably our total cost. You can come and determine our total cost at that point. You can come and determine our total cost. You can come and determine our total cost. So we have said we are going to start with our, where our reorder level is, which is 2000, which is 2000. So this is our reorder level, meaning that at any given point of reorder level will not be expected to have safety stock. At reorder level, we will not be expected to have safety stock. Always mark that point. At reorder level, will not be expected to have safety stock. So therefore, at reorder level, I don't have any safety stock. And if we don't have any safety stock, I won't be having our holding cost. Then, demand level of 2.1 and our reorder level is 2000, meaning that I'll be required to maintain a safety stock of 100 units. My reorder level is 2000 and our demand is 2100. So therefore, I'll be required to maintain a safety stock of 100 units, right? The same concept. My reorder level is 2000 and our demand is 2200. So I'll be required to maintain a safety stock of 200 units. The same concept. My reorder level is 2000 and our demand is 2300. So therefore, I'll be required to maintain a safety stock of 300 units. After we are done with that, the next step will be what? To determine the holding cost. The holding cost, remember when we started, we said you are going to determine the holding cost of maintaining this safety stock. And in our question, were we given our holding cost? We need to identify that. Our holding cost in our question, we also need to determine our shortage cost per unit. Shortage cost per unit. We need to have these elements. We need to have these elements, my good students. So holding cost, what are we given? Let me share that question with you again. See what our holding cost and shortage cost were. Stock out cost per unit, I'm given 400, right? Stock out cost per unit, you can clearly see note 1, I'm given 400. Carrying cost, I'm given 80 shillings. That is the holding cost. I'm given 80 shillings per unit. And number of orders. Number of orders given, my good students, you are given number of orders, many orders in a year? 5 times per annum. 5 times per annum. 5 times per annum. 5 times per annum. So I'm given 5 times per annum. So we do have 5. So these are the variables that we need to identify. These are the variables that we need to have. So the moment you do have that case, come ask ourselves, our safety stock is 100. What do I need to maintain as safety stock? And each unit, I was maintaining it at how much? I was maintaining each unit at 80 per unit. So clearly you can see this should give us 8,000, right? The other should give us, that should be 200 by 80, 200 by 80. 200 by 80, you can clearly see that should give us 16,000. Talk of the other one, 300 by 80, that should give us 24,000. That should give us 24,000. That should give us 24,000. That should give us 24,000, right? Then we are done with that point. So our holding cost I should be talking of to be our holding cost. What about our shortage cost? What about our shortage cost? So at this point, you are going to look at it at different levels of demand. We are going to look at it at different levels of demand. So we start with this level. We have 2,000 units in stock. We have 2,000 units in stock. My demand is 2,100. My good students, what will be our shortage units? I'm having 2,000 in stock. Our demand is 2,100. So therefore, of course, I'll be having 100 units here. So I'm going to have here 100 units being our shortage. And what was the probability? What is the probability of us? We are looking at 2,000. We are looking at 2,000 here. So I'm having 100. And what is the probability of us having this demand level? I'm having 0.1. We do have 0.1. We add. If my demand level is 2,200, what will be our shortage? Our shortage, of course, will be 200. And what was the probability of us having 2,200? We did have 0.05. So 0.05. We are going to add. We are going to add the other component, which in this case you are taking. If my demand level is 2,300 and we only have 2,000, so our shortage units will be 300. The question will be, what was the probability of us having 2,300 and having 0.03? So you're going to take 0.03. 0.03. So that should give us our expected shortage in units. Expected shortage in units. So this case, what will we be having? I'm going to have 100 by 0.1, right? By 0.1. We are going to add 200 by 0.05. We are going to add 300 by 0.03. So therefore, in this case, we should be having how much? 29. So I'm going to talk of 29 here. We multiply by what? If you can recall what we did when we started the class in determining our shortage cost. Expected shortage units, we multiply by the number of orders. Number of orders, you're given 5. Then we multiply by the shortage cost per unit, 400. So therefore, that should give us 29 by 5 by 400. My good student, for me, I'm getting 58,000. We are getting 58,000 here. I'm getting 58,000 at that point. I'm getting 58,000 at that point. To be our shortage cost. To be our shortage cost. To be our shortage cost. So to determine our total cost here. To determine our total cost at that point. So my total cost should be, my good students should be the aspect of total shortage cost, which is 58,000. This time round, we didn't have our holding cost. So therefore, I should be talking of 58,000. We should be talking of 58,000 at that point. Proceed to the next point. Now we are taking our demand level to be 2,100. We are taking our demand level to be 2,100. What will we be having? My demand level is 2,100. This is what we have in store. My demand here is 2,200, meaning that I'm going to have a shortage of 100 units, right? Because if this is what we have in store, and my demand is 2,200, meaning that I'll be having a shortage of 100 units. And what was the probability of us having 100? We should be talking of 0.05. We add. If my demand level is 2,300 and I'm only having 2,100, so therefore my shortage will be 200. We multiply by the probability of us having this demand level, which is 0.03. 0.03. So therefore that should give us 100. We multiply by 0.05. We are going to add 200. We multiply by 0.03. So I'm having 11 by number of orders, by shortage cost, which in this case we should be having by 5 by 400 to give me a figure of 22,000. So we have our total shortage cost and we have our holding cost. So therefore my total cost we should be having plus 8,000. Recall this, plus 8,000. So therefore that should give us a figure of how much? 30,000. So my total cost should be 30,000 here. I'm going to have 30,000 at that point. I'm going to have 30,000 at that point. We proceed and determine the next component, my good student, which is now we are looking at this demand level. So we assume that this is what we have in store, 2,200. My demand level here is 2,300. So of course I'll be having a shortage of 100. And probability of us having 2,300, we had 0.03. So therefore that should give us 100 by 0.03, which in this case I'm having 3. By number of orders by shortage cost per unit. So therefore that should give us by 5 by 400 to give me a figure of 6,000, right? To give me a figure of 6,000, So 6,000 we add to our 16,000. That should give us, we add our holding cost. Recall our holding cost, 16,000. So therefore I can clearly see that we should be talking of a figure of how much? 22,000. I'm going to have 22,000 being our total cost. After we are done with that, we proceed to the next component. The last one here. Our demand is 2,300. Right? We don't have any inventory now. Our reorder level is that and our demand is that. So we don't have any inventory. So I'm having a stock out. I'm having totally now, we have a stock out completely. We don't have anything. So therefore in that case, we should be talking of shortage cost, I should be having 0. Shortage cost, I should be having 0. Shortage cost, I should be having 0. So therefore, my total cost here, I should be talking of our holding cost, which is 21,000. So I should be talking of our total cost here, which is 21,000. Because for 21, recall, we are taking the 21 here. You can clearly see we are taking the 300 safety by component of that case. We arrived at 21 by taking 300, of course, 200 by 80. That is what we had there, 16. That's why you have 16 here. 100 by 80. We had that one. Then 300 by 80, we had 24,000. This is 24,000, correct? Not 21. that was 24,000. That was 24,000. So clearly, here we have 24,000, right? Here we have 24,000. Here we have 24,000. 24,000. That is what we have there. So at this point, what will be our total cost? I'm going to have 24,000 here. We are going to have 24,000 at that point. So now, my good students, we've prepared our sum. And recall we mentioned that what will we be having as our shortage? What will we be having as our talk of our safety stock to maintain? Because if we can clearly look at this question, we were asked, advise the management of Kiawara Limited on the amount of safety stock to be maintained. So you need to advise on the amount of safety stock to be maintained. So safety stock to be maintained. Safety stock to be maintained. Safety stock to be maintained. For safety stock to be maintained, I'm going to look at a level, safety stock level, where we are incurring the minimum cost as possible. We are going to look at a safety stock level where we are incurring a minimum cost as possible. Like in our case here, where did we have our minimum cost? I can clearly see that my minimum cost is at 22,000. And at that 22,000, what was our safety stock? At 22,000, our safety stock was 200 units. So therefore, safety stocks to be maintained, I should be having 200 units. Safety stock to be maintained, I should be having 200 units. Then, what about the next question? This was part 1, what the examiner wanted us to do. Part 2 of the question, what were we asked? So, the other part, this is what you are given. So this is what we have. Determine the probability of stock out. Determine the probability of stock out. So what will be our probability of stock out? Number 2, probability of stock out. So I'm looking at a case whereby you don't have any form of stock as form of safety stock. Where we don't have any form of stock, where we don't have form of stock at all, we should be talking of an area where our shortage cost is 0. And the probability that our shortage cost will be 0, it will be at which demand level? At 2,300. And you can clearly see that, what is the probability of us having this demand level? I'm having 0.03. So probability of stock out, we should be having 0.03. 0.03. And imagine, my good student, that is all the examiner wanted you to determine. That is all the examiner wanted you to determine. So, in our next class, we are going to look at another question again with a whole different concept, whereby probably we'll be looking at the concept of linear interpolation. I believe you're good on interpolation concept. So, in our next class, you're going to handle that question. Then when you are done with that, I think we should be very good. We should be very good. So, meet me in the next session whereby we are going to look at the concept of interpolation and introduce the concept of inventory of perishable products. Inventory, control of perishable products. Thank you so much, and let us meet in the next session.